Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an amazing trading day yesterday as we are about to kick off a brand new day. Markets have moved up a little bit in the overnight hours. We've come to a brand new all-time high after a potential slowdown and this loss of momentum. The markets on coronavirus news got to new highs. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates. If you're a regular returning viewer, do me a favor, share this today on social media. Let somebody else know about what we're doing, trying to grow the channel the best way we can. All right, let's go ahead and get rolling. So the ES this morning, we're up about 7 points, and you know, we're back into the territory of our rule stands that if there is no potential, there are no potential shorts unless it comes as a breakdown. And so yesterday we had a little 15-minute level that we had fallen from and got a nice little move out of that zone in the overnight. But as far as what happened all day yesterday, markets continued to rally pretty strong, and we got a really nice move. Now I do have a little bit of a demand area in here if price does give us a bit of a retracement. And it's a pretty simple demand area to see. It's not overly disguised, if you will. So whenever that happens, just be aware of basing before the level. Make sure that any basing that comes in before the level would not invalidate this zone. Now, as always, if we have basing above the all-time high, we'll have a potential for a breakout above that all-time high. That's kind of the best way to trade all-time highs, is to look for basing in front and then take the breakout. Remember, if it doesn't base, it's not going to be as effective. Next would be the Nasdaq. So in the NQ, we see another very similar price action in the NQ that we did in the S&P, with this potential level right in here if price gives us a bit of a return. Now, the good thing about this level is that it's an old area of resistance as well, and some of you may even have taken the breakout. I heard that a lot of you took the breakout yesterday as a potential trade opportunity. So look for that for a potential pullback into this zone. Next, looking at crude oil. So crude oil yesterday, we talked about a little breakdown. So the breakdown got you in, but then you got essentially, if we broke down below this level, there was an opportunity for a short after the gap fill level. But 1, 2, 3, 4, 5, 6 candles later, price had really gone nowhere. 7, 8, 9, 10 candles later, it had really gone nowhere. And that's why we talk a lot about if it doesn't work right away, it's probably not going to work. And then we then rallied back up to that supply level, which has to be a confirmation entry because we've already hit it once. In reality, this is probably not going to be a great level going forward. So I need to remove this zone. Now, if you're in it, that's okay. I would just keep your stop fairly tight, especially with the buying pressure that we're seeing in through here. So with that in mind, I want to look a bit higher for some supply, but we are putting a little bit of a base in on the 4 hour. So if you look at the 4 hour, there is a potential to believe that we're going to see a double bottom pattern forming in here, right? There's definitely two bottoms that have been formed right in here where we could see a little bit more bullish momentum. So if we do get above this confirmation entry, then I believe you'd be better off starting to look for longs as the crude oil would start to have a little bit of upward momentum. However, as far as it goes right now, you're still going to be better off looking for shorts because our big picture trend is technically still down. And I would look for a potential breakdown below this level here. We've got a demand area down here, but remember that demand area has to be a confirmation because it's going counter trend. When we use our trade optimization plan and we score our trades, the scoring of the trade would definitely be scored no higher than an 8 based on our big picture trend direction. All right, next we're looking at gold. So let me know in the comments below yesterday if you were able to jump in on that gold iron condor we talked about. 1605 by 1540, I want to say was paying a little over maybe even 20%. based on the amount of capital that it's tied up in that iron condor. So let me know in the comments below if you're able to get into it. If not, no big deal. You may still be able to get something for it today, just not quite as much credit since we lost a little bit of theta. But keep an eye on that one. The iron condor between those two levels seems to be a very, very effective strategy. We are chopping very much sideways in the overnight after falling pretty much most of the day yesterday. So I wouldn't take a breakout on this only because it's very sideways inside there. Technically, you do have a little bit of a reversal level up in here, but I don't like the time of day that it was formed. So with a poor time of day in here, I might not want to consider this spot here with this upper wick. If I slide down to the 15. You do have, some levels up in here near the pivot, and I think that would be the area for a potential reversal if price gets into that range. Sliding over to the bonds as well as the currency markets in the ZN, we are maintaining our front that says, hey, markets aren't really giving us much opportunity in the bonds. That's what we talked about yesterday, and that's what I still, continue to maintain. Is that we don't have a hugely probable bond trade in front of us. None of these levels to me are worth leaning on. I'm just not willing to take a risk on a level that's not high enough probability for me to get in. Looking at the 15-minute chart, this level here is not too bad. It's from market close yesterday, so that one might be worth looking at from the market close, just simply based on the fact that we are coming down a little bit and we're seeing strength in the equity markets. Next would be the Aussie. So in our Aussie position, we did get a little breakdown. Breakdown in the Aussie, remember 1, 2, 3, 4, 5, 6. After 6 candles, we'd kind of gone nowhere. We did have basing in front of the level. So if you liked the little basing breakdown in the Aussie, that was a decent little one. And now we've rallied up to our supply level in the overnight. So we hit our supply level, and we're starting to sell off, coming down from that zone. Target on this is going to be right here at 67, so that would be your first target on that level. However, if we continue to base sideways, you're going to take your stop and move it to break even, because remember, if a trade's going to work, it's going to work fairly quickly. So don't give it time to come back and stop you out, is what I would say. So keep that in mind. Next, the euro. So our euro breakdown was really our best trade of the day as we broke down from there yesterday. Got a really nice move down from that level, and I think it's giving us another potential breakdown from where we are right now. So if you caught that one worked out for a pretty nice trade, still continuing to run. So if you're in it, stay in it. You're doing okay. Canadian dollar, same breakdown is still valid, the same one that we talked about yesterday. We got a little bit of, we just touched below yesterday, but we didn't get basing in front of the level, so it wasn't a quality breakdown. By the time we did get basing, we then popped away from it. So I think the area is still valid for a breakdown, although forming a little bit of a base, and we could actually rally a bit higher from here as well. So if you wanted to look at it like this, I think you may have both of those in play. Looking at last but not least, Great British Pound and Japanese Yen inside the pound yesterday. We did get a little bit of a move down from our supply level. Price came into this level. We got a little bit of a move down. Once again, if you follow the 6 candle regiment, you probably took your stop, move it down, maybe take a little money off the table towards the end of the day. We got another test into that level, and it fell away from that area. I don't think I want to try this one again. So I'm going to remove that zone at this point, although the trade was a very effective level. Next opportunity, I think, would probably be in here, although my bearish stance doesn't really change. I'm still overall a lot more bearish, so I don't know that we're going to make it up to this region. Japanese yen, we still have our supply level up above us. Not a whole lot down below us for us to really jump into. Could get a breakdown below this area in here, but for now I like the reversal as the better trade. So those are our levels that we're looking at for today. If you've got any questions, as always, send us an email, support@tradersarmy.com. I will talk to you soon. Thanks so much. I will see you.